Hi, Jonathan York, Bear Financial Partners, look at the investment market. Well, President Trump delivered on Liberation Day. I don't know if it's going to be Liberation Day. More people are calling it Recession Day. He's announced tariffs to 180 different countries, but supposedly they are reciprocal. But what's sort of quite interesting is that the formula they use, no one seems to understand it. All the sort of trade experts and sort of finance experts come out and just say it makes no sense. And it's really based on the relationship between the balance of trade, the amount of exports from the US into that country, and that then determines what the tariff is going to be. But just to take some example, he's claimed that China has a 67% tariff on US goods. In reality, it's closer to 2 to 3%. And therefore, tariffs under Trump's proposal for China are 34%. Indeed, he's even imposed tariffs on a couple of small islands, Heard Island and McDonald Island, which don't actually have any inhabitants. The only inhabitants there are penguins and seals. And this has led many sort of finance experts to come out and say he's just sort of made this up on the fly just to try and justify the numbers. Now, obviously, the reaction from the stock market, because you've got huge uncertainty now, big falls. US market fell by around 10% over 2 days. So everyone's 401ks has fallen dramatically. And then potentially what sort of annoyed people even more is that while this was taking place, Trump was spending the weekend at his golf course in Florida, sort of smoozing up to the Live Golf and the Saudi oil money. Now, there were widespread protests across the US over the weekend. But what's interesting is that some of the Republicans are now coming out and sort of saying, well, actually, tariffs, they are a tax. They're a tax on the consumer, and that is not good. Because Trump has always claimed that tariffs aren't a tax, they're a tax on the country. They are not. The tariffs are paid by the importer into that country. And that is then either absorbed by that company or passed on to the consumer. Now, in the background as well, Trump is still trying to get through his sort of budget bill and the huge tax cuts as well. Now, if you look at that, that's potentially going to increase the deficit by around $5 trillion. Now, as usual, he's claiming it's nowhere near that amount. But again, most of the respected finance and economic sort of experts are saying it's going to be around $5 to $6 trillion over the next sort of 10 years. Now, again, Trump and the administration are claiming a bit of success because the economy is roaring, apparently, because the latest jobs data was around 229,000 jobs created. But important to realize that those numbers were pre-tariffs. Indeed, many of the big Wall Street companies are now predicting a recession is increased now up to around 60 to 70%. And again, quite ironic, before the election, he was sort of saying, bragging about the stock market he created in his first term, and the stock market would roar once he was re-elected. That has not been the case, and over the last 3 months, he's just gone down and down and down. Now, he's also gone into the Fed as well, saying now will be a good time for the Fed to cut interest rates. Jay Powell and the Fed have come out and said, it's very hard for them to do anything on rates at the moment because there is increased uncertainty and potentially inflationary implications for the tariffs. And that will not please Trump. Now, certainly interest rates in the US have come down because, people are now starting to sort of price in the probability of a recession. The 10-year is down at 4% and the 2-year is 3.70. So they are down 50 basis points or more over the last sort of 2 to 3 weeks. But then again, if you've got that tax plan going through, that's going to increase the deficit. That will put further pressure on the amount of funding for the US. Indeed, quite interesting in the US, about 45% of the imports that come into the US are then used in manufacturing in the US. So that is inflationary. So all in all, a very uncertain times, and the only the only person who seems to think these tariffs are a good idea are Trump and his administration. Now, on the potential of a slowing economy, oil has fallen back to $62 a barrel. So again, that's going to impact Trump's sort of drill baby drill policy, because at $62, a lot of the shale companies are going to find it uneconomical to produce the oil. So they will be shutting down or reducing capacity, certainly. Now, in the UK and the EU regions, they're sort of trying to present a bit of a united front and just working out what their strategy is going to be against Trump's tariffs. And likewise for Australia as well. I mean, Australia's quite an interesting case because, Trump has got into them saying, we import a lot of beef from New Zealand and Australia, but they don't take any US beef. Now, the reason why the US imports beef from Australia and New Zealand is because they don't produce enough to meet their own demands. So they have to import it. So by placing a tariff on that, he's putting up the price of meat, inflationary pressures on grocers, which he's so sort of keen to sort of stress. But also as well, the sort of staple hamburger in the US is going to increase in price. Now, here in New Zealand, the Reserve Bank meets this week, and it'll just be interesting to see if they do cut rates further. They should do. Certainly, the New Zealand economy needs it. We don't have a lot of tariffs on US goods, despite what Trump claims. He claims it's sort of 20% tariffs on New Zealand goods. In terms of goods coming into the New Zealand from the US, it's probably around 1 to 2% in terms of tariffs. Now, the Reserve Bank meeting here in New Zealand is just a question of whether they cut rates by 25 basis points or 50. Really should be 50 because the economy certainly needs that sort of extra boost going forward into the sort of winter months. But also as well, it will keep the momentum going, which so far has been encouraging. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I'm looking forward to speaking to you soon.